All right, traders, this is Blake Morrow, and you are listening to the week ahead video for June 7th, 2020. I'm actually filming this a day early because I do have some plans on Sunday. So just bear with me if some news comes out after I've filmed this. Obviously we're going into Saturday night here in the United States. Protests are still pretty big in certain parts of the country. So, will they turn violent? Will the markets care? Frankly, I doubt either. They could turn violent, but will the market care? Look, equities, you take the NASDAQ, we hit all-time highs this week. So do they really care? In all actuality, even if it's a pullback on Sunday, probably not. But as the market opens. But before I get into what we're looking for into next week, including the FOMC on Wednesday, let's just take a moment to talk about ForexAnalytix. If you guys are not part of our community, if you have not tried out our platform, it's only $1 for 10 days. Now, for $1 for your 10 days, what you get is you get the premium version of ForexAnalytix. Now, the premium version is, $119 per month, or you could do an annual or semi-annual, whatever you want to do. For those of you that know about us, tend to take the longer term ones just to save some money. But if you want to do the light version, that's $19 a month, you can do that as well. But you're still going to get the premium version when you test us out. So when you do so, make sure you download the mobile app so you get all of our analysis, and you can join in the chat rooms and have all the analysis right at your fingertips. Okay, and it's a nice application, so you can have it on your your iPhone or your Samsung Galaxy or whatever iOS or whatever device platform you use. So I just want to get that out of the way. Make sure you try us out. Now, going straight to the platform, this is the data flash. Let me get that out of the way. That just shows you what upcoming data is coming out. And when the data hits, when it flashes, it's almost as quick as a Bloomberg system. So it's pretty nice to have. Okay, so let's talk about... Well, first of all, a lot of the analysis isn't done because it'll be getting done tonight or early morning in Europe. So I'm not going to go through the charts in ForexAnalytix, but just so you guys know where they're at, whatever instrument you're looking at, right? If you're looking at an instrument, you can just click on where it says basic technical analysis and take you over those charts, or candlestick analysis, read the analysis, macro, what's happening with that specific instrument, harmonic analysis by Andre, Elliott wave analysis by Grega. And you can go through all the charts too and read all the analysis. But what I'm going to do is I'm going to take you a little bit through, before I take you into FX, I'm going to take you through the equity markets, because I think that's the bull in the room, right? Not the elephant, the bull. All right, so I guess we should start off by taking the NASDAQ 100. The NASDAQ 100 is at all-time highs. Now, as ridiculous as you may feel that this market is right now, and how can we have gone through or are still going through COVID-19, all of these protests and rioting, and how is it possible that these markets are all-time highs? I really... as I've been telling you guys, I feel that it is a situation that the market is just, everybody's chasing each other. I mean, when you have big investors like Warren Buffett, who missed the bottom, and even though, about a month ago or a couple weeks ago, he said he didn't find anything that seems attractive, it hasn't stopped the market, because institutions have to be invested in the market, and if they cannot beat the S&P or some of these broader indexes, they're going to get redemptions if they're not fully invested. So everybody's chasing the market right now. Plus, there's a lot of optimism about a V-shaped recovery. And look, frankly, I hope there's a V-shaped recovery. And I was reading this blog of this gentleman, and I'm not going to tell you who he is, but I've read his stuff for years, and he talked about a V-shape. Whoops, I didn't want to do that. He talked about a V-shape versus a swoosh, which, a V-shape was like this, and then we kind of go sideways, right? And a swoosh would be, down and, let me get rid of that, but we recover like this. And, the difference between the two is the V shape gets you, back to where we were at, and then probably, sideways, and then the market will go sideways for an extended period of time. A swoosh would be a constant grind higher. But to be quite honest, I'm fine with the V-shaped recovery, because if the fact of the matter is, if the market gets back to where it started, basically, it's probably going to be sideways for quite some time, as the market digests all this information. And for you and I as traders, we want that volatility. So you're gonna have ups, and you're gonna have downs, and you're gonna have downs, and you're gonna have ups. And frankly, if I had to guess at this stage, based on what we're seeing, especially in the NASDAQ hitting and closing at NASDAQ 100, excuse me, closing at all-time highs, my assumption is, the Dow Jones Industrial Average, which is at the 78% retracement right now, the S&P, which is above the 78% retracement, about ready to challenge the 88% retracement. Although we have very overbought, like relative strength here on the S&P, we've actually been a lot higher in the past. Even though we were, historically pretty high as far as relative strength goes, we still have more to go. And I wouldn't be surprised if we get some sort of blow off top, meaning that we challenge and break all of these highs, all-time highs. Just imagine all the liquidity that's been thrown at the market. Imagine, as we have a vaccine, whether it's a good vaccine or not, it's just a vaccine. Whether the employment report that came out on Friday, whether it was a good one or whether you don't believe the numbers, or there was, some fudging of the numbers, whatever the case may be. But, let's say unemployment, gets back down towards, 7 or 8%. The market might just rip to all-time highs as the NASDAQ, extends, towards 10,000 on the NASDAQ 100. And if you look at the composite, a little bit different chart, but pretty much the same. The fact of the matter is, risk is rallying. So where does that leave currencies? Well, typically when when stocks are rallying, the dollar will come under pressure. So I would not be surprised if the dollar index continues its slide, and we continue to fall towards, whether it's this 618 retracement right here at 90, let's just say roughly 94. You can look at like some horizontal support here. That wouldn't surprise me at all. Where does that put like the euro dollar? Well, that would put the euro dollar a lot higher than where it is right now. Yes, we did stall at the 88% retracement, just so you guys all know. Here's the daily chart. High, see this fib level right here, high to low, 88% retracement. We rejected it. We're coming off now. I think the euro dollar will probably come back down towards 111.50. So this breakout point, let me put up a 4-hour chart. So 111.50, I think this is where the euro is going. It's going to allow us, for those of us that would like to be on the long side, maybe some entries back down there. I think that's entirely possible. As far as the euro goes, before we continue. But frankly, if you look at the, by the way, if you hear any background noise, one of my sons and his friend is visiting in from out of town. The euro dollar could be heading towards 115 to 117. I think it's entirely possible. Some of the other currencies that are out there. I mean, you look at like the Aussie dollar. Talk about a V-shaped recovery. The Aussie dollar, you think it's going to squeeze if we break through this resistance at 70.40? And as long as we stay above this uptrend line right here, that currently will come in around 68. Let's just say roughly 68 and a quarter, 68.50, depending on when we get there. If we get there, how much is it going to squeeze if we break the highs from December 31st or January 1st or whatever, January 2nd, whatever that day is? We break above that, we could squeeze right up to 71.40, maybe even further than that. But this is a massive squeeze, not only in the Aussie, the Kiwi dollar, You know, Kiwi dollar continues to stretch its legs. I don't see why the Kiwi can't reach up towards 67, 67.50. Now, all of this, just keep in mind, this is all predicated on equities continuing higher. Things could go wrong. And you know, like I said, I'm filming this on a Saturday afternoon, and on Sunday or Saturday night, things could go disturbingly wrong over the weekend. You know, your guess would be as good as mine. But what I'm saying is, equities could possibly come under pressure, and if they do, then whatever dollar weakness that we have been seeing will be reversed. The one thing that does worry me a little bit about some of these major currencies, whether you're talking about the euro dollar, or excuse me, I should say the commodity currencies like the Aussie, the Kiwi, and the Canadian, the daily sentiment indexes are getting a little stretched. That means that bullish sentiment is at getting to be extremes. So as they become extremes in like the Kiwi dollar, the risk is that, you know, it will top out soon. And you know, here's a good example where a 261% extension matches up with an 88% retracement, which is 66 cents. So, you know, could we reach towards 66 cents before getting some sort of pullback here and bounce? Excuse me, I almost sneezed. That I think that's also possible because the sentiment is so stretched at this point. We have the U.S. dollar Canadian. We have actually filled the gap at the 74 and a quarter, and we closed basically right as at the gap fill. But that doesn't mean we can't continue lower towards maybe 132. If you think about this previous, and I have to extend out or you know, take these daily charts and really pull this out here. Take this previous triangle, right? And you think about, you know, a retest of this big trend line that comes through here. That comes in at 132, which would be, you know, towards the bottom of this channel. So I mean, we could literally grind. We could literally grind down towards 132 before bouncing in the dollar Canadian. That would coincide with an Aussie dollar, you know, probably closer to 71, 72 cents. The US or the Kiwi closer to 66 cents. Yeah, the dollar Canadian could very easily slip towards 33, 32.50 before bouncing. Okay. One other currency that I want to talk to you guys about is the US dollar Japanese yen. Now you can look at all the other yen pairs, all right? But the US dollar Japanese yen, the reason why I bring it in focus is for those of you that use ForexAnalytix, you might have seen a recent pattern in play that I had on the US dollar Japanese yen that that the entry area was at 108 and a quarter, and you know, the target was 110, which prematurely I closed out the pattern in play because after the jobs numbers we hit basically the 618 retracement. I thought that might have been it. We could extend towards 110, but if you think that, you know, equities are going to continue higher and you're seeing a continued squeeze in the stock market, we could see continued weakness in the yen. The market is aggressively and over, you know, the speculative market is very long yen. They start to wind out some of those positioning. You know, we could very easily be trading at 111, 112, and again, if S&Ps break into new highs, why couldn't the dollar yen break into new highs above 113 or 114? So not only the yen, but keep an eye on the other yen pairs, euro yen, Aussie yen. They continue to squeeze, and it's strong. It's you know, it's hard to stand in front of those moves as they are moving as fast and as aggressive as they are right now. So with all that being said, if you guys feel that this video is going to be beneficial to you next week, make sure you click the thumbs up button as you're watching it on YouTube. Make sure you subscribe to our channel so you don't miss any of our great interviews that we do throughout the course of the week. It actually, Dale Pinker conducts some of the best interviews with some of the brightest minds in the financial market, you know, Monday through Friday. He tries to get one in every day. And so if you miss any of those, at least if you're subscribed to our YouTube channel, you can go back and watch those. Also, I did want to mention next week we do have the FOMC FOMC decision on Wednesday. We have to keep that in mind because as we hit midweek, whether the Fed starts to quote unquote taper bond purchases or not, based on if they feel that the recovery is strong enough, the Fed could do some tinkering around with their bond purchases. So keep that in mind because that could affect sentiment as we head into Wednesday. All right, guys and gals, my name is Blake Morrow. I hope you have a great trading week this next week. I'll see you on the F.A.C.E webinar on Monday. Thanks for tuning in today. Have a wonderful remainder of your weekend.